Welcome to Stock Talk with Nico Kritikos. And after dealing with some technical difficulties, we're going to try making this video again. So in this video, we're going to be going through Shopify stock, and I'm going to be giving you my bullish thesis on why I think this company will be very successful into the future and why I think the stock is oversold. And we're going to be doing some fundamental analysis to show you the projections I come up with for the future. And they're not only my estimates, but it's also utilizing some of the company's estimates they put out. So let's get started. First thing we're going to look at the stock price, and the stock price movement over the past year has been very volatile. In November, it peaked out at about $1,700 a share. I now own 3.5 shares at an average cost of $965. If this were to drop more, I would like to pick up more shares if it got around $600 a share. And I think it's very possible, because if you look at some of these other companies, like these tech names like PayPal, like Meta, a lot of them are erasing pretty much all the gains they've made since COVID. So before COVID, Shopify was $520. I don't know if it can get that low. That would be an extreme scenario, I think, if it got down to $520. But I think like right around $600 is very realistic if we have more negativity in the market and there's more selling pressure just in the general market over the next couple of weeks. But $658 a share, I think, is still a phenomenal deal. And let's get started with this. So right now the company is trading at an $81 billion market cap. Okay, their revenue for this past quarter, Q4 2021, was $1.38 billion, which was a 41% increase from the same quarter in the previous year. There is the growth expected for EPS for 2022 is expected to be 7%, and the forward price to earnings is now a 75. So that is a well, forward price to earnings is kind of high for only 7% EPS growth, but compared to where it's been at in the past, this forward price to earnings is actually much lower than where it's been at in the past. It's traded at over 200 for a long time. But revenue growth, this looks much healthier. This is much more attractive. 31% sales growth expected for 2022 with a forward price to sales of 11. The metric I like to go off of is whatever the forward price to sales is, I want the revenue growth for that year to be at least double that. And in this case, it's almost triple. So I think off of that metric, it looks very undervalued. But from the forward price to earnings, I like to have the what's it called? The percent EPS growth to be at least half of the forward price to earnings. So in this case, we're not even close. If it's trading at a 75 PE, I want to see EPS growth of around what, at least 37%, but we don't have that in this case. We have strong revenue growth, but not as strong EPS growth. So that is that. Now let's switch to the next video. Then if we look at the innovation this company is doing, once we get into my checklist, we can see why I put this down. But the innovation I see with this company is that they're allowing people all across the globe to easily create a fully integrated store and have access to billions of customers all over the world. I think I read earlier that there is over 5 billion people on the planet that are using the internet. So that is how I see this company being innovative. And the moat I see them having is right now they have 10% market share of total United States e-commerce, and that's in second place, only behind Amazon. Amazon has about 40% market share. On the press release that they came out with the other day, they talked about how they want to expand into international markets like China. I think they're already operating in over 170 countries, but they partnered with JD.com, which is a Chinese company, and that's going to open them up to 550 million new active customers based in China. So that's some good news there. If we look at this press release here, we can see some other things they talked about was how they're partnering with TikTok and how that's helping them grow, as well as all the other different ways they want to reinvest back into the business in 2022. I thought this was interesting too. They also said that this year, we're going to see the integration of Shopify payments with Buy on Google, allowing customers to purchase products from Shopify merchants and check out directly on Google, paving the way for the launch of Shop Pay on Google for the first half of 2022. So another thing they brought up, which we'll get into later with the revenue and net income guidance, but the other thing was they showed that there's some structural changes to the business that is going to allow them to pretty much for the first half of this year, it's gonna take some time for it to catch up. But the second half of the year is when that it should really benefit them more and push up their revenue and net income numbers. If we look at, this is their investor deck that came out with this past quarter. How I said Amazon has about 41% market share. Shopify is at 10% now, and right above Walmart, eBay, and Apple. So they're in a very strong position. Here is their revenue growth numbers. Revenue up 57% for last year at $4.6 billion. Compared to 2020, they grew 86% and $2.9 billion. As you can see here, the number of new merchants on their platform has continually grew over the past couple of years. So that's also a solid number there. And then for gross merchandise volume, this is the value of the products sold on their platform. And 2021, this number grew 47% and hit $175 billion. And we're going to use that number in a little bit to dive into my projections for the future. If we keep going, we could see they also said that they're guiding for, they're expecting, how I said they're expecting for Q1 2020, Q1 of this year, for revenue to be now a little under, it's supposed to be down year over year, and last year they did 988 million. So I'm guessing the number's gonna be somewhere around $980 million of revenue for this first quarter. Okay, now here's a graph I made showing 2020, 2021, and my projections for 2022. Okay, here we have the first row is United States total addressable market for e-commerce. Okay, this is what the whole market's worth. So in 2020 it was 644 billion. 2021 it was 767 billion, and then it's projected to hit 875. And I think I got that number is from Shopify. Gross merchandise volume, once again the value of the product sold. This is for Shopify, 120 billion there, 175, and then this is their number 235 billion. I think they're aiming to hit for 2022 GMV. Market share was 8.6%, 10% this past year, and then this is my estimate. I'm guessing 11%. We're going to use that as our estimate. And revenue was 2.9 billion, 4.6, and then once again I'm estimating 6.2 in 2022. It's kind of tough to gauge this because, okay, so think about their GMV is expected to grow 34%, right, from this past year to this year. So I use the same number to get to the revenue growth. So maybe that might be a little bit too much. It might be. They did say that they will grow faster than the e-commerce market, and the e-commerce market is going to grow 19%. So it'll be above 19%, but they said it's definitely going to be, it's not going to be in the 50% range. So that's why, and they said GMV will grow 35%. I'm estimating it's somewhere 30 to 35%. So $6.2 billion, maybe $6 billion, somewhere around there will be revenue for 2022. Over the past 2 years, the price of sales for this company has traded extremely rich, averaging 44 in 2020 and then 38 in 2021. Keep in mind, part of that is because the main reason that is because of how fast they were growing. So remember, they grew 86% in 2020. That's a big difference from the 50% number they just did, and then now they're guiding for close to 35%. So that's why that number is going to come down a lot. The metric I normally use is whatever percent growth they're going to grow by for that forward-looking year. That divided by 2 should be a healthy valuation. So anything below that number is undervalued, and then a lot of times it will trade over, and that means it's either it has a rich valuation. And so that's where I see this. So think about this. This was they grew 86%, and the price of sales was almost half of that. Then for this upcoming year, let's say they grow 35%. I'm guessing it'll be somewhere around this 20 mark, right? It should be, because normally it'll trade a little bit over fair valuation. So fair valuation would be about a 17 price to sales. But let's just put, 20. It should be around 17 to 20. Right now it's at a, what is it? It's at an 11 now. So maybe that number could come down a little bit. But net income, 319 million, 2.9 billion for this past year, and then I'm estimating 415 million. The reason for this giant spike is this is like a new accounting thing that came out a year ago, and it's where when you have a unrealized gain on one of your investments, you have to put that into your net income. So that's why this is so thrown off, because that net income of 2.9 billion is only because of their gain on the unrealized gain on their equity. They haven't even sold the investment. They just, it doesn't make a ton of sense. But without that unrealized gain, actual net income would have been around 14 million. So it would not have been that great. Then we have an average price to earnings, 271. It traded super rich that year. 2021, it averaged 57. Remember, it's skewed by that giant net income number. And then I'm estimating about 250. Even that number, even 250 might be a little high. So my I don't know, I'm thinking, it's hard to make these estimations because there's so many different numbers and factors, and you're taking guesses on 10 different things. But I would say this is a very realistic, and I try to be conservative with it. I'm not being this isn't like a super bullish case or anything. This is just what I see happening. So that's where I get this. All these numbers are not going to add up because they're all different. They're all based off of different statistics, but this is the basic, this is like the average. So average market cap 2020 95 billion, 2021 165, and I think for 2022 it'll be about 124 billion dollars. And therefore that's why I put, with an average market cap of 124 billion, that's about $1,000 share price equivalent, and that's 53% upside from where we're at today. Okay. Now we're gonna get to the checklist. So checklist, is the stock down? It sure is, over 50%. Has revenue and net income been increasing? Yes, it has. If we look at, this company has not been profitable for that long. So I think they reported their first profit in, what I want to say, 2020. Yeah, 2020. So see, these are all unprofitable years, but it got better. Now this is here you go with your net income is skyrocketed because of that unrealized gain. And then you see revenue has grown year after year. So that's both going to get a yes. Price to sales and price to earnings, I kind of explained why that is, why they're both in a healthy position. How I said with the price to sales, I like to have the percent growth, the forward percent growth, at least twice of whatever the price to sales I'm paying. And then for price to earnings, I like to have the EPS growth, the forward EPS growth, to be at least half of the forward price to earnings. So pretty much the formula is flip-flopped for the PE. But see, these numbers are based off of 3 days ago, so it's actually these ratios are actually much lower. The price you're paying is much lower now. Okay, I explained the innovation that this company does and their moat. Growing industry, yes, we know, they're getting more and more merchants, they're getting more market share, they're getting more customers. We know e-commerce is going to continuously grow. They're also expanding into international markets. They announced that partnership with JD.com, so you got all that going. Return on invested capital is, see, that number is probably off too, though, because of that unrealized gain. But bottom line is ROC is good. Margins are good. Cash flow is good. If you want to look at the cash flow here, we can see it'll look at, we'll see return on invested capital 31%. That's good. Profit margin is 63%, but once again, that's skewed. See how it's off? Look at gross margin 53%, but profit margin is 63. So that's how we know it's off. If we look at cash flow here, we can see, I like to look at operating cash flow. Then you can look at how much they're investing, what their end cash position is, and then what the free cash flow is. So operating cash flow looks good. Investing cash flow, they are investing very heavily into this business. So they're investing a lot more than they're making. But end cash position is decent. You know, it peaked out in 2020, but it's still high. And then free cash flow has been growing. So overall, they're doing a good job with running that. Then you got diverse revenue streams. I put a yes here because of a couple things. Okay, so you have international markets. That diversifies your ways of making money. Then you have the fact that, let's see, if they'll tell us how many customers they have on here. You know, they have whatever, they got what, 40,000 partners. And let's see, I want to say it's, you know, they got tens of thousands of people they're working with, right? And they're making money from, there's all those different customers coming into all these different Shopify stores and buying stuff. So let's see. Yeah, so let's see. It must be probably somewhere around that 40,000 number. But point is that they have a lot of customers. Okay, they have a lot of people paying them. Balance sheet looks good. This is good. Long-term assets versus long-term liabilities. I think we can see it right here. Yeah. So here you got current assets 6.8 to 8.5. Long-term 885 to 4.8. Once again, right here, you can see it. Equity and other investments, including that 3.4 billion. That's what put this number so much higher year over year. Here's your liabilities, and then you got your equity of 11.1 versus 6.4 last year. So balance sheet looks good. Equity is growing. The only one they missed here was the strong share buyback or a dividend. They don't have either of those. The number of shares grew 3%, so not that bad. Nothing to worry about. But still, they're not buying back enough shares. Is big money or insiders interested? Yes. If we look right here, you can actually see what's going on here. The only thing was the insiders are not buying. The insiders are not buying. The CEO actually sold, you know, who knows, a good amount, millions and millions of dollars, if not more, of shares the past couple months. But there is still some buying activity and there's still some selling activity. So here you have your funds. This is the CEO. Okay, Luke Key Tobias. See, so you can see he sold 277,000 shares, which was worth. Okay, his net worth. Okay, yeah, his net worth is 10, or his the amount of shares he owns is worth 10.8 billion. He's the biggest shareholder. Okay, that's how many he owns. But he sold 277,000 shares. Then you get some other people selling. But you also have buying pressure, right? You have JP Morgan buying, UBS. You have there's some buying pressure out there as well. So the big funds, how much does let's see. You got Morgan Stanley having 8.1 billion. ARK Invest owns this one as well. So that'll get a yes. And then founder-led, good management. Yes, this guy right here, he is from Canada. This is a Canadian company, and he is the founder and he's the CEO. So that's always a good sign right there. And he did it. You know, he's done a great job. This is an innovative company. He's making tons of great partnerships out there, and yeah, I like it. So this is going to get a score of 17 out of 18. Very nice there. And I can see it coming back, because some of these other companies like PayPal and Facebook, they've erased, you know, they've erased 2 years of gains. So Shopify, you know, there's nothing stopping Shopify from doing the same thing. That's why I think Shopify can come back to, who knows, maybe I don't know about 530, but maybe 550, 570, those numbers are possible. So, you know, this stock is just in free fall right now. It could come back, it could come down to 600. So that's why I bought some more shares today, or not some more shares, but I invested a little bit more in there. And if it comes down to 600 or 550, then, you know, I'll buy some more. I'll probably buy a whole nother share. But yeah, that's the reason. Those are the reasons I'm bullish on Shopify. I hope you guys learned something today, and this is pretty much where I see the company going. So I'm curious what you guys think. Let me know your opinion down below, and I will catch you guys in the next video.